Hey Alpha fam, welcome back to another episode of Alpha Commission. Of course, today on Alpha Commission we are going to go over the sea of red on the different coin metrics here. We do see all of our favorite coins basically taking a pretty big hit as the stock market retraces, as of course that profit taking after a massive bull run is taking place. And of course, we haven't been able to confirm that we're in a bull market as defined on this channel, which would be confirmation after a bull run of a continuation trend, which means we're still subject to all of the risk of the macro downtrend that we've been in. And so it's not even worth isolating any coin here in particular. You can see that the hits just seem to be generally across the board, 10 to 15% to 25% being very common here. And let's just go ahead and move over to the economic calendar, because there are a couple things that we should just point out. That obviously recession fears aren't over, but on the 16th, obviously we did see that the housing sector was getting a little bit softer than what was expected. We did, of course, see on the 17th here that retail sales took a big hit. And so this actually increases the chances of a deeper recession than what would be expected. And a deeper recession would mean that stocks may be evaluated to the downside. Do you understand? So if stocks price over earnings ratios are downgraded, to the downside, then of course the stock market as a whole would likely to be traded down, which means that stocks and crypto will follow, of course, whichever index is being hit the hardest. Of course, jumping to today, Thursday, August 18th, of course, we can see that jobless claims are pretty much holding steady. Existing home sales are softening. Again, that softening homes market, but we see jobs pretty much in line with expectations, which does suggest, in fact, a little bit better than expectations, which does suggest that inflation, wage inflation, employment inflation is here to stay, a little bit stickier than perhaps the Fed would like. And that does increase the chances of interest rate hikes in the future. But the combination of that plus the kind of sour outlook in the housing market, and perhaps also retail sales, just suggest that we are headed towards that possible stagflation outcome, which could bring markets to a new low. And so, what do we see as a result on the charts? Of course, we do see just red across the board. Healthcare pumping. Not sure why. Maybe it's because everyone's just jumping out of a window after seeing all this red on the charts. But these type of sectors do tend to cycle, and so healthcare is seen as a little bit safer than perhaps technology or whatnot. And so money is just being shifted over to healthcare while the charts sort out their current positioning. With that being said, let's go ahead and move over to the charts. You can see a pretty clean dump there on Bitcoin. Of course, I did suggest that this was likely to happen based upon the technical pattern that we were putting in, which I gave a 70% chance of a breakdown. And if we go over and just look at that pattern, then you can see after we put in that 1, 2, 3, 4, 5, fifth technical touch on an ascending triangle, and as we failed to hold 24,500 in order to have any type of hopes of an accumulation pattern, the breakdown, that small gap, you would think it doesn't really matter that much, 24,300 versus 4,000 even basically, but that small $300 difference, right? And then the lack of any strength above that basically gave us a 70% chance of a likely breakdown based upon the technical pattern. And so that's when I called a breakdown. And sure enough, what happened almost within hours of me putting out my last video, we started to see that breakdown. Now, we did have a little bit of a pump to the upside. Of course, that's just retesting the bottom of that breakdown. And so that was your last chance to exit your positions. And of course, I did give the Alpha Fam here quite the heads up in order to safeguard your positions, knowing that there was a 70% chance of a breakdown. And I hope the majority of you did take that advice and protected yourself, because just look at this traumatic fall here. Already 10%, which is what I suggested, would be the minimum that we should expect to see, and that a likely number would be around this $20,700 mark, right? Which, of course, it makes sense that as the price is rising over time, that a little bit of front running was likely to happen. But if you were able to catch that move, that would have been just an epic short. It would have been just an amazing shorting opportunity had you taken the initiative to put risk into that 70% chance of a technical breakdown from a technical pattern that does have a very good success rate, and which, obviously has measured moves associated with it. Now, for these rising wedges, there is a little bit of disagreement as to whether or not the bottom line would be this first valley, which has a roof over its head, or whether it would be the kind of initiation wave where you have, this as a first valley, because it's technically on trend with this valley right here. And so perhaps we could see lows even hitting around the $19,000 area, especially if this breakdown just pushes us to retest the bottom of this range. And so, let's not ignore the possibility of further, downside, especially if we're considering this little bit of a trend line right here. You can see we're using it as support. You can see we're using it as resistance. We used it as resistance here, and then we broke through. Perhaps we could come down to this price, perhaps around 19,500, and use it as support again, and just pick up some of the liquidity on the lower side of this, kind of trend that we have going on here. Of course, that's not guaranteed. We could go lower, and actually, I think that would be quite bullish, because most likely that would create a bullish divergence with the RSI. And so I hope that we do go just a little bit lower than 17,500, put in a bullish divergence, and then pop up from there. But if we do end up putting in just a higher low on this overall pattern, that also wouldn't be the worst thing in the world, just to make some type of a pattern like this, and then perhaps even putting in a higher high at 28,000, but maybe we're just going sideways very slowly. And so, we can't really just become too bearish at this moment. We have to be open-minded to this possible bottoming of the market. And then, of course, we also have to be aware that whenever we've had these breakdowns in the past, they have been quite traumatic. And you can see the beginning of this breakdown right here, very similar to this breakdown. And then hold on to your hats. We really dropped after that. Same thing here. First leg down, a little bit of consolidation, and then whoa, right? Same thing, up in these areas, you can consider this to be the first drop down, and then boom, right? Same thing here, kind of a first drop down, and then boom, it was a little bit more dramatic earlier on in the bear market, but as we're getting towards the bottom, perhaps these drops are going to soften. I would just say that usually these drops do happen in pairs, and so I'm not personally considering that this is over. I think that there could be more to it. If we jump over to the daily, let's go ahead and just see how that volatility that I've been warning people about is playing out. And yeah, you can see here the volatility has spiked, right? It just spiked. But look, we're not even halfway through this move. And so if we did continue for another half, maybe even another 2/3, this could be a very nasty drop. You can see there's no guarantee that we just do the whole move in just one run, right? Sometimes these things meander about and change directions, but you would expect perhaps to at least meet the middle of the range here in any type of these explosive moves. And since this was a fairly sizable contraction of volatility, we would expect the explosion of it to be reasonably strong. And so I would expect to hit at least the middle of this, this volatility explosion here, which of course we've been preparing for, possibly heading down in the to the downside ever since we saw the pattern on the 8-hour chart. I mentioned that the 8-hour chart often has one or two fake outs before it just explodes to completion to the downside. And 7 out of 8 times, whenever we've had that signal in a down market, you can go ahead and double check the history of this signal, and you can see, based upon my analysis in other videos, that every time we've basically had this signal, it has exploded to the downside, and this time seems to be no different. We are, in fact, exploding to the downside in volatility based upon that 8-hour signal. I know some other channels who are volatility traders. They are looking at the daily signals. They're looking at daily signals, for example, on the CME chart. And the CME chart, again, guys, look, it just, this teardrop hasn't failed yet. You break out of the teardrop, you test the upper bounds of it, and then you break down. This was perhaps the most extended version of one yet, but you break the teardrop and down you go. And it's happened time after time after time after time in this macro downtrend on scales that have spanned months and months, even a year, pretty much, and then all the way down to these kind of small patterns. And so this is definitely something to look out for. We did hope that we would be able to fill that CME gap up here at the 28,000. But again, guys, there is the possibility that we could be doing something like this, and that maybe just down the road we fill in that gap. If we do continue dramatically to the downside, then all bets are off. Who knows what's going to happen? But we may end up close to these levels down here again, 16,700-ish, maybe that 12,000 to $14,000 range, and even that $8,000 to $10,000 range is within reach as we've just fallen lower and lower, and we're getting into those areas that people just never believed that we could enter into, but that I've been preparing you for ever since I got out of the market at $59,000. I've just been preparing you for these drops after drops after drops, and the technical possibility of falling to $20,000, which we did hit. And then, of course, in re examining just the strength of the drop, the technical possibility of getting as low as this, I hate to say it, but $5,000 to $8,000 region is technically possible, but more likely we would probably find some type of bottoming area around this 12,000, to $16,000 area. We do have a fair amount of support around here, around 12,000, around $11,000, and so that could be the location that just kind of front runs the bottom. It doesn't max out the bottom, but just be aware that there is a bottom that is possible, and that we also do have a CME gap down here, right down here, which could in fact be a target of the market. And so you can see this gap right there. It did not get filled in, and so that could be filled by one of these, cascading drops to the downside, even if, we wouldn't personally prefer it. That's something that we have to be aware of as a risk, as these CME gaps do tend to get filled over time. And if it's just time to fill in this lower one at approximately, let's just call it 9,500 to $10,000, then there is the possibility that it's just time to fill in that lower CME gap. And you can see we are positioned to head in that direction as this volatility explodes to the downside. But no, I do not think that we are going there just in this move. If we do look over at stocks, then we can see that we do have a fairly good amount of support on our way down. Of course, we have had these resistance areas that should offer some possible bounce to us. And right now, we're just making a bullish retracement. We could, in fact, bullishly break down to our breakout line, to our trend line, and then use it as support. And a bull market could be confirmed as we go forward, but that's not guaranteed either. So we are just looking at both possibilities, the possibilities that we could break down bullishly and continue bullishly, or the possibility that we break back down under our bear trend line and re-enter the bear market in perhaps even a lower leg down on trend with this kind of supply line down here. We could perhaps just break down for a fifth Elliott wave lower than what people would expect. And for SPY did not end up breaking out of its, bear trend line, unlike many of the other indices, which did. You can see, of course, the Dow Jones broke out. You saw that the Nas 100 broke out. You can see that the Nasdaq broke out, and you can see that the Russell 2000 extremely bullishly broke out of its downtrend, this thick yellow line here. It bullishly broke out of its downtrend. And all of these indices are just coming back to bullishly retest some support, bullishly retest their breakouts. But the troubling one, of course, is SPY, which never had a breakout. And so if SPY is basically in charge of the market, then we could be seeing just a total retracement of all of these gains over the last month and a half, the last 2 months, sort of like what we lost here. And we could even see new lows by the end of the year, which personally, that's been my view for a while. I do believe we're in a 1, 2, 3, 4, 5 Elliott wave kind of thrust to the downside, whereas many people have suggested that there's maybe an A, B, C pattern that was just a correction on kind of like an over exuberant market, which then will continue to the upside. Well, we're going to find out, which concept is the real one pretty soon. Within a couple weeks, we should have a very clear idea as to whether or not we are just dropping, like a lead balloon, or whether we're actually going to hold on to these breakouts in these, in the majority of these indices. And especially in the next couple days, maybe even today, we should find out whether or not we're going to hold on to the breakout um, very bullishly, right? The very bullish consideration. But just breaking back in temporarily and then bouncing back out wouldn't be the worst thing in the world. We might see some type of conclusion to this, this toppy pattern within next week at the latest. And then, of course, we'll definitely have some answers as to whether we're just dropping again, like just dropping like flies, just suffering in this market in the next couple weeks, especially as the S&P 500 shows that weakness. I'm kind of just thinking on the fly here, guys. I don't really plan out these episodes, but I am trying to absorb a lot of data these days, and so far we've been pretty spot on. Of course, we have had a couple misses. That always goes hand in hand with trading. You can't be perfect. You do see that after we broke down from this trend, that what we're doing is retesting the bottom of this curve. And so, as I suggested, we were likely to come to 108 and that this would be a very bearish phenomenon for the rest of the market. The US dollar just pumping again. It does look like we may even exceed 108. And if we hit these areas and basically double top and come down, that would be extremely bullish for the market. That could be a return to a bull market, especially if we just end up working our way down. But if we do end up, testing this growth pattern, bearishly breaking down, but then catching support again on this trend line, then that could actually bode very badly for the market, and this could be an epic bear market if the dollar just wants to continue to just head on up to this 120 area. And even though the exponential growth curve is breaking down, what we could still see is pretty healthy growth depending on market conditions. And so, guys, what have I been saying? We're likely to get a confirmation of the bottom of the market around September to the end of the year. I've never been someone who suggested that the bottom of the market would be confirmed in Q2 2022, or, even right now in summer. Of course, I did have to present those ideas to you, but I've always made it clear that I am of the opinion that we are going to be testing the bottom of the market at the end of Q3, at the end of Q4, and maybe even the first quarter of 2023, when we should see what the characteristic of the recession is going to look like, especially the global recession, as we cannot just consider the US in isolation. You do see that just pump that I suggested would happen as we broke down right here on USDT dominance, and so everyone is just putting their money back into USDT. They're taking it out of crypto, and what you're seeing is just this pump, right? It's not clear where this would stop. Maybe we have this kind of resistant area right here. And so if we do have this type of kind of resistance zone, you can see that the market can continue to take money out. Basically, even if the best case situation were we to kind of reject up here, there would be another leg down in the market if this trend does continue. I don't see any particular reason why it should stop just right here. There's just like a little bit of resistance just over here. So perhaps this is just temporarily slowing it down. But overall, I would suggest that there is likely to be a second wave down. And as that wave down initiates, of course, there are going to be just heavy losses. Let's go ahead and see how the VIX is doing. The VIX, again, using that line as support, that line that we needed to break under in order to have easy trading. We are just losing that area as this thing bullishly reflects. We are not out of trend yet. So if you do just look at this kind of a trend that we have here, there is a bit of a descending wedge being put in place here. And so similar to what happened on Bitcoin to the downside could happen to the upside, similar to what happened with USDT. And so what we could see is this thing just bursting back into this kind of wedge that it has, and that would be very bad for trading. So we want to stay underneath this kind of teal line. We want to get back down into this beautiful heavenly trading zone, which for the S&P 500 volatility just makes trading extremely easy. What we don't want is to be pumping back up into these highly volatile kind of hellish conditions that are very bad for stocks and crypto. We want to be in this heavenly area. But unfortunately, as you can see, we are starting to break out of that descending wedge to the upside, and so that could spell disaster, especially as you look at the way that these things tend to turn around. They tend to spike in incredible volatility spikes to the upside when they do end up putting in a bottoming, a formation. And so maybe we have a couple days, a couple weeks of okay kind of sideways trading, but suddenly volatility spikes and everything just goes to hell. And so that's why I did suggest a couple days ago for you to protect your positions. And again, I hope you guys are taking those type of warnings very seriously. Of course, this isn't financial advice. It's just me talking to myself. And of course, I have a couple of my friends that follow me on YouTube, so I'm not really talking to anyone but my just very close circle of personal friends where we just talk to each other. But if anyone else can benefit from this advice, feel free to consider it, and of course do your own research, weigh your own pros and cons, and consult your financial advisors. But so far we've been pretty good on the track record here. Nobody has a crystal ball, nobody can see the future. The best you can do is look at the options that you have day to day and then choose a direction for that day, and then the next day is a new day and you have to start over. Unfortunately, that's how it works, right? So let's go ahead. Let's see. We looked at the VIX, we looked at the DXY, we looked at USDT. We can see what's going on with Bitcoin dominance. You can see we're just flooring basically here. We did have this breakdown of the trend upward, which did suggest that there could be an alt season, in my opinion. And then, of course, we did get that alt season. Of course, we did get it when we maxed out this kind of trend up here also. But the uptrend breaking down was the big consideration. So far, we're not turning around. So far, Bitcoin isn't really taking over. So not sure exactly what that means, but we have had this type of a pattern in the past, and you can see that we're in that territory for a possible rebound on Bitcoin dominance, which would suggest that perhaps that altcoin season is over. Maybe we're going to go back to a little bit more of a Bitcoin season, especially as Ethereum takes some hit. If we look at Ethereum's dominance, it does have this very weird chart, but looking at it on log scale, of course, it looks pretty nice. What we can see is that just like a little monkey hanging from a tree branch, Ethereum has managed to just barely recapture its historical bullishness trend, but it really hasn't been able to get into the dead center of it. Ethereum has a ton more work to do, and so this could be a massive fake out. And perhaps what we're seeing is just one of those very clearly kind of Wyckofian, distribution patterns where maybe it's going to come back down, perhaps as Bitcoin dominance pumps up. But we'll see. We'll see. Maybe Ethereum had its time. Maybe it hasn't. I personally would like to see Ethereum's dominance get back into the middle of its channel and just kind of like hang on there. Ethereum is very good for the market, but of course, it does have many rivals these days, and so it's natural that it would start to get toppy, just the same way that Bitcoin does. But Bitcoin, really can't lose too much more support on its dominance before it just becomes much weaker than we've basically ever seen before, ever since 2018, to be honest. And I'm not really sure how to make of this. This does look a little bit Barty to me, and so I would think that perhaps we could recapture these candles over here, just depending on how technically this market is going to trade with algorithms and bots. There's just a lot to consider, from stocks to recession to the Federal Reserve to dominance to all of these altcoins. And to be honest, we're just not able to process all of this stuff at the same time. One thing that we can just consider is that Bitcoin hasn't made, a lower low yet. We are just making higher lows, and so can we really call this bearish? In this current formation, it's not. It's not super bearish, but it does look a lot like all of these other breakdowns, okay? Like it has the clear, just look at this. It looks very, very similar to all of these major breakdowns, and so, again, just I strongly recommend to protect yourself. I'm trying to make the case that there could be another wave down, another wave breaking down. And even though our 70% chance, our calculatable odds of breaking down have basically been completed, we've met the minimum threshold for that. The historical levels that have been part of this kind of a drop hasn't just been that 10 to 15%, it's been 25 to 35%, even with drops up to 45%, which would bring us into that $14,000 area. So, guys, we very much are still in danger of perhaps putting in a new low on the Bitcoin chart. We are in danger of just getting into those really dire lows. There are kind of historical limits to how far we can drop in any one push. And so I do suggest that our range pretty much is that $20,000 to $14,000 range. And while that might not be that much help, it is at least something to wrap our minds around as we get, just more and more confused by a market that, has just so many dynamics going on. And if we look at our EMAs, on the daily here, we can see that, of course, we're well under our top EMAs. You can see we can rise above them for quite some time before we get a correction. And so, likewise, we can actually be under them for quite some time until we do a real correction. There was never any requirement, there was never any guarantee that we would retest this area, and we could continue lower before we end up testing these 200 EMAs, right? These orange lines up here. And, we did test the 89. Getting rejected there would suggest maybe it's going to take another wave before we test the 200. If we do go to the weekly, you can see the concept that I was mentioning before, which is that we might just come to tap the 300 EMA or the 300 MA, right? And that would actually put in bullish divergence if we did tap that 300 MA, as the stock market does tend to target these 300s. And so if stocks are kind of leading Bitcoin, or stocks mentality is leading Bitcoin, then there is the possibility that we could drop perhaps to 17,200, and maybe we're just slowing down here at this 300 EMA. So you can see the white line that I have here is the thick white line is the 300 EMA, and then the thin white line is this 300 MA, just the simple moving average. And you can see that every time we've met one of these EMAs, we tend to get hung up on it. And so as we get hung up on this, I would just suggest there is the possibility that we do fall, a bit lower and then perhaps gravitate towards this 300 MA, just like we did with the 200s, just like we did with the 89, just like we did with the 50. And so that would be an area to target in my mind if we do continue to the downside, not trying to be over bearish, but just kind of being realistic about what's possible to expect. And then if we do take our, our fibs here, and let's get out of log scale just to not confuse things, just to make sure this thing doesn't have fib levels. Okay, let's see. And then what you can see is that we have tagged the 786, and if we did come down to the to the 300 MA, it would basically be just a retesting the 786 with perhaps a bit of bullish divergence on the RSI. And if we break down below that, right, then that would be on trend with our previous market here, right? That would be on trend with our previous market from, you know, uh, back in the 2019 days, which could suggest, again, if we don't take the full retrace of the COVID dump, it could suggest that 886 is a target here at 11,000. If we do take the full retrace, I mean, this thing is almost taking back everything from the COVID days, which could be possible. That's how markets can work. Just whenever you have, stimulus or whatnot, the market can just take it all back. After the recovery happens, the market can take it all back. It's just something that markets do. They tend to retrace almost fully in many of these just kind of like dumb money situations where people are just throwing money at things. And so let's just be open minded to these lower levels. And I really do think that that 886 is a reasonable target. If we do put this on log, then you can see that we do have this trend from back here in these days. And for this, I'm going to go to a longer chart. And you can see that we do have this pattern on the log scale, which if this market is trading on the log scale, then what you might see is this pattern where we have a line that supports our whole bullishness. We break down from it, start a new market. The new line that's formed supports our bull market. We break down from it, create a new line that supports a bull market. And what I would suggest is that because of this double top, because of this rounding on the chart, right? This was basically exponential growth. This is rounding. Because of that rounding on the chart, we are a little bit delayed in breaking down from this diagonal just because the angles have become more and more distorted as we turn to the side, that we're going to have the first time ever probably a breakdown like this where we could even see a downward angle. And so that might just put in some bullish divergence, which then pops us up quicker than perhaps in the past, or at least guarantees us, some type of a run. The angle of the support of that market, again, if we put price action on, it looks a little bit different, right? You can see this touch right here, this touch right here, this touch right here, this touch right here getting heavy support on two lines, right? And look at this. I didn't even think about that. Look at that, right? And so that would actually give us quite a bit of support here. And then if we do bounce off, this area, it could be in that 20,500, assuming these lines mean anything on the, exponential chart, on the logarithmic chart. Then it could be that $20,000 area. Breaking down from there, perhaps we retest, a little bit of a higher price before breaking down to perhaps retest 17,500 or just slightly lower than our lowest low that we had, putting in some bullish divergence, and then off we go. So personally, my plan is I do think that this is a high likelihood scenario. So my plan is to kind of load up on whatever the next low is that we put in. It could take months to play out. I'm not saying that this is going to happen overnight. I'm not saying it's even part of this drop. I'm saying that if this does work out the way that I'm thinking, that it could take until the end of the year before we start seeing those lower levels. And then you see this kind of M formation right here, right? See this kind of M formation. I think we would put in kind of an M formation, and then off we go, off we go. And so, personally, whatever the next capitulation event is towards the end of this year, that's when I'm going to be a big, heavy buyer. Okay. And any of these levels down here, I think, are probably relatively good values compared to where this market is likely to go. You can see that based upon my hypothesis here, based upon my theory, which again is not guaranteed and is not financial advice, at least we do have this momentum line to the upside, which if we retest the bottom of it, even if Bitcoin is dying off, let's just say Bitcoin eventually goes to zero. Who knows? Who knows what the future could bring? Let's just say this hypothetically. Even if Bitcoin and crypto eventually go to zero, there does look like there's this historical trend of the likelihood of testing the bottom of this line, just the way that we kind of tested the bottom of this line, even broke through it exuberantly, perhaps have a bull market, perhaps just cap out at like 70,000. But anyway, based upon these kind of geometries, even if we're starting to put in a negative slope, even if we've had a double top for the first time in Bitcoin's history, which is bearish, guys, that means a macro possible turnaround, right? A macro dip, or at least a consolidation to the sideways for a while. That's basically what we could be doing, but I would suggest that we are likely to test the top of this, and even if we end up coming back down kind of bearishly and kind of doing this thing, and later on maybe it takes maybe it takes 10 years to sort through this in sideways price action. At least I think we have one more bull run to go, right, before that sideways action, or even deeper retracement. Let's just say the death of crypto. Let's say it's regulated to death or something. Okay, I'm not calling that. I'm just saying that this chart has a double top, which is bearish, and so that could call for some type of retracement, right, to the downside, which people might not expect. And the market likes to liquidate everybody, right? But that would be years down the line. And so people holding their Bitcoin at $1,000, at a couple $100, they are not immune from market forces, and the market likes to liquidate everybody. And so the power players, they are going to go for that liquidity. They are going to try to force them to sell. And so that's only when, the last person, is willing to sell or whatnot, then we could actually have a bullish turnaround after this type of inflection point. So it could take a while. It could take a couple years, but that doesn't mean that we can't have a bull run in the meantime, perhaps even an exuberant spike to the $100,000 area, but most likely at least a return to 65,000 to 70,000 in my opinion. Okay. Guys, I'm just going to end it there. You guys understand, why I've been saying protect your positions. You guys understand now why for the last couple weeks I've been talking about volatility. Go ahead and review my videos. Why I've been talking about volatility and why I've been talking about a possible big move coming up, even while the rest of the market was basically trying to convince you that we were in another bull market. I was mentioning this is likely just a bull run. We don't have any confirmation of anything in terms of a bull market. We only have confirmation of a bull run, right? Which, we're going to find out where the bottom of this thing is soon enough. But that's why, as we've been doing our trading, I've been saying always take your profits. You guys know that I warned you of various different fractals, various different outcomes, and even looking at Kadena, right? I mean, I've had debates with people about this, but even looking at Kadena, the bullish case was that we retrace back here. The bearish case is if Bitcoin breaks down, then we could see again the bottom of our range. And what you're seeing here is what have I mentioned on every Kadena video? Kadena likes to fully retrace. And so don't be surprised if you see those lower levels, as we end up breaking down. And so some guys tried to debate me and say that there's no way that we're going to do anything but skyrocket. And while I very much admire their trust in the system, their belief in crypto, and while I am on the same page of them in terms of these assets being kind of interesting and cool and the future, I just don't trust the crypto market in general. They tend to betray even the good cryptos that are out there, and so once again, the crypto market has betrayed a good project like Kadena, and so what you do see is it just fully retracing. Again, go watch every Kadena I've ever made, and what you'll see is I always suggest that it does a full retrace. Do not be surprised by it at any time. It can break trend, right? It can break trend, and if it doesn't bullishly hold those areas, then it is going to break all the way down for a full retrace, and that's what we're seeing. And as Bitcoin has a second wave down, it could even make new lows, which is why I've always reminded you about these zones down here, and which is why the motto of this channel is always be taking your profit, right? Always be selling. These coins aren't going to be loyal to you. You don't need to be just hodling these coins. This is a trading channel. We take our profits along the way, and even if we don't reach our stretch goals, because there's always another goal higher, there's always a goal higher. But when do you actually pay yourself? Some people may think I was nuts for paying myself down here, but then guess what? We bought back in here. Some people might think I'm nuts for just selling right there, even lower than this price, right? But no, I paid myself and then I bought back in lower. Then they thought I was nuts for taking profit here. No, guys, we're gonna get to $3. We're gonna get to $5. Why are you taking profit here? It's okay. I'm going to pay myself. I'm doing work every day. I'm going to pay myself. And then, of course, we have a retrace, buy back in. Another pump. The last one we sold at was 240, so we paid ourselves for the entire run, the entire bull run that we had. And this bull run, right, we caught the absolute pico bottom of this bull run. And if this ends up being a higher low, we've caught the full move and we've made the maximum profits possible. And then if we end up bouncing into these stretch goal areas, fine, we're going to take our profit again. Even if we go higher, we'll just wait for a pullback and then we'll buy back in and then we'll sell higher, right? So, guys, that's what I'm saying when I say always be taking your profits, always be selling, put food on your table, right? Don't just collect these coins. They aren't going to feed your family. You have to feed your family by selling, okay? That's when you take your profits. That's when you pay yourself for a job well done, for your work that you've put in over weeks. You have to be selling. And I know a lot of you guys just like to buy and hodl, and that's totally cool. That's just a different philosophy. This is a trading channel, okay? So I'm not going to coddle the hodler perspective, but I do understand that good hodling strategies do exist and that they can be more successful than bad trading. But good trading, right? Good trading puts money in your pocket today, and then you can always buy back lower and just trade again. Whereas hodlers may have to wait months, they may have to wait years for the bottom to be set in and then to reach, those levels that they've been hodling in on every dip. It could take years before they get back. We're getting paid, every day. We're getting paid every week. We're making our money. We're putting food on the table. Being traders, that's our job. Okay. All right, guys, I just want to end it there. That was your alpha for the day. Stay safe and happy trading.